Hi, everybody. Welcome to another Friday, September 19th. Scott Riley, the Market Update Desk, NMLS number 157524. Definitely had a lot of action over the last day and a half here with Fed decision, what the markets interpreted that as. Let's kind of go into a little bit more. It's very interesting when I watch the national news and local news the night of the Fed decision. None of them really know what they're talking about. They reported that, oh, magically mortgage rates are going down. One even said mortgage rates were at their lowest point in 3 years. Complete idiocy. They don't know what they're talking about. In fact, the lowest time was September 16th last year was the lowest interest rates. Got down into middle to higher fives, lower than where we are today. So I just want to quick go over that. Now, obviously, we've talked about it. The Fed cut a quarter. Some of the things I want to talk about. Chairman Powell said that policy has been, quote, clearly restrictive. Shocking change of verbiage that he's using there. Now, that's signaling that he believes the Fed has been more than just a little restrictive and that there's more room to cut. That's kind of what we wanted to hear. The Fed said that economic activity moderated in the first half of the year, and the focus has been on the inflation side of the dual mandate, exactly what we've talked about. But now the labor market and unemployment are more in balance from a risk standpoint, with the more downside uncertainty to the labor part of the dual mandate. Powell acknowledged that job creations are running beneath the break even level, which is why unemployment rate has been slowly ticking up. On the inflation side, Powell explained that it's moved up and remains, quote, somewhat elevated. He believes that 3/10 to 4/10 is due to the tariffs. Also mentioned that services inflation has been cooling. Yes, we've talked about that. Now, what I wanted to get into was both the SEP, Summary of Economic Projections, and the magic dot plot. So on the SEP, this is what they think the consensus is going forward within the Fed members. Unemployment rate's going to remain at about 4.5%, core PCE to remain at 3.1, GDP they did revise upwards from 1.4% to 1.6%, so that's a good thing. FFR, Fed funds rate, 3.6% to 3.9%. The median projection is for two more cuts this year. So it's telling us they're projecting about 0.5% more in cuts this year. Now, while a lot of the commentary from Powell was hawkish, these things are good. It's just it came off wrong in his speech, and that's why the markets reversed course. Now, on the dot plot, it showed that one Fed member wants a hike, didn't want to cut today, but did fall in line with the total voting. We'll talk about this potential one vote in a minute here. 6 voters want no more cuts this year. So 7 of the members wanted either the same or maybe even a tick higher. 2 wanted a quarter cut, 9 wanted a 0.5% cut, and 1 wanted a 125% or 1.25% rate cut. Now, when we look at this, we think we know where some of these votes came from. It's likely the Fed member who did not want to cut this year was either Schmidt or Cook. In reality, it's got to be Cook from a political standpoint. And the person wanting 1.25 cuts was most definitely Moran, who just got installed. Now, the Fed's futures market is forecasting an 88% chance of a cut in October and a 78% chance of a quarter cut in December. So we've got, if we can just get some clarity on this, the markets will get a little bit more in balance, and maybe we could get that runway to a sub 4% 10-year treasury. Initial jobless claims came in yesterday. Initial claims came in down 33,000 from the previous report to 231. Now, continuing claims, those fell 7,000, but still above 1.2 million. So very concerning there. Now, one thing we saw today was the Coality Rent Index. This showed that shelter costs, including rent, are the biggest component in both the CPI and PCE reports. Rents have been decelerating, just like we've been talking about. And today's Coality Rent Index shows that they should continue to do so over time. Rents only rose by 0.2 month over month in July, which is well below the historical average for that time frame, which is 7/10. As a result, year over year, rent prices decelerated significantly from 2.9 to 2.3%. That's a good, healthy drop. If these real time numbers, which by the way match up with what Zillow's reporting in their blended rents report, if the real time numbers were included in PCE and CPI, we'd have core CPI lower by about 0.5%, and PCE would be down by about 0.3. These are big altering numbers. Now, we did see the Minneapolis Fed president, Neil Kashkari. Now, he's not a voting member yet, but he is going to be after the next two meetings. On CNBC this morning, he said that rents, just what we talked about, and shelter costs should continue to decelerate, as well as other services. He believes inflation will go down to 2%, but it's going to be delayed due to tariffs. He's getting more and more confident that tariffs are, in fact, one-time price increases, but it could take 18 months to 2 years to work through the system to show up in these numbers. It's kind of a long range out in the future there. He was also in favor of 2 more cuts. So we know he was one of the 9 that called for a half-point cut. On the labor market, he sees continued softening as he's not heard a lot of hiring in his district, in the Minneapolis district. Conference Board of Leading Economic Indicators, the LEI report, showed that a decline of 0.5% in August. The index is now at an 11-year low, showing lower growth. They now forecast the economy will grow by 1.6%, which is in line with the Fed. Which is in line with the Fed forecast on their SEP. Now, what we're seeing is the 10-year Treasury battling a top line of resistance of 4.126. It's right now sitting at 4.139. To give you an idea, just shortly before the Fed announcement, it got down to 3.994. So we've gone up a healthy amount in the last day and a half. So if we can just keep closing below that top line resistance, it's going to help us a lot. Next week is an important week. Now we're going to get mortgage applications and new home sales on Wednesday. On Tuesday, we actually get Fed Chair Powell speech. Now that could be a market mover. Thursday is going to be initial jobless claims, existing home sales, final Q2 GDP. Then Friday, we get PCE, personal consumption expenditure. Hold on, it's going to be an important week. We've got a couple offers going in right now. We've done a couple refis just in the last day and a half. We beat the market increase. So customers listening to us saved money compared to listening to the news or other networks. Give us a call, 616-293-2189. The Market Update Desk, of course, is your original singular market news source for Western Michigan. Have an awesome afternoon.